guys, it's Maximal Profits here, and I am doing a stock analysis on Apple. First of all, in my opinion, Apple is not a buy. Using a DCF model, Apple is incredibly overvalued, its moat is bloated, but it is still a great company. I will show you the model right now. Basically, using a 5% terminal growth rate here, actually, uh, and a 28% free cash flow margin, which is incredibly optimistic considering its average has actually been around 26%. I got a fair value of 79. Uh, Basically, people I think are making way too high of assumptions for Apple. Some are even doing 8% growth rates that really just doesn't pan out for such a huge company. Uh, but let's see how 8% goes. Uh, so we ah so we paste 8% into oops. Anyways, uh, I'm still not familiar with pasting here. Uh, Used to using Excel instead of. All right, there we go. It really doesn't materially change the fair value. Apple price is actually still uh 146, 145. Uh and yeah, these numbers that you see are actually higher than what analysts put in, and these numbers are also incredibly optimistic. Let's look at their latest quarterly results. I believe their growth rate actually has been around 2%, way higher than 9, 5. Of course, the current macro is troubling. Yeah, 2%. Current macro is troubling, and there are reasons to justify a slightly higher growth rate than 2%, but that's still insanely high, and it's still overvalued in this model. Of course, next step, Apple's moat is bloated. So the reason why I think Apple's moat is bloated is first of all, Apple's markets have short product life cycles. Like for example, they would have to release a new iPhone 14 or a new iPhone model every year or so in order to keep everything fresh and top of the line, beating the market. Uh, Also, uh, their markets are extremely competitive. They have shown weakness during recessionary periods with less spending, and I was gonna put in here. I don't know what happened, but companies like BlackBerry, Nokia, basically, they had extremely strong leadership positions. Everyone thought they had a wide moat, but they all, you know, what happened to them? Lack of innovation, which is basically what Apple's doing here now. Uh, so that is why I think Apple's moat is bloated. And I use basically like in my calculations, I would use a one multiplier for a narrow moat, which I think is what Apple has. If you use a wide moat, it does change it a little bit, but still below Apple's price right now. And I think Apple's moat is still a narrow moat. Next, Apple is still a great company, even though its valuation right now isn't looking good. Uh, Apple has generated consistent returns for shareholders, actually around 18% since its IPO. However, past returns don't determine future returns. They have no correlation between each other. Apple also consistently buys back its stock. Uh, its shares outstanding is actually reduced by 3%, which means uh, that would be an increase of 3% in terms of value to shareholders. Dividends, Apple's dividend yield is around 0.6%, I think. Yeah, 0.62. Its payout ratio is 15%. It's a healthy dividend with a low payout ratio. Uh, it's a sustainable dividend, and it over a long period of time it does generate returns for shareholders. And lastly, we can't forget that iPhones have revolutionized the world. And they really brought smartphones really into popularity, and where we are now has to be thanks to their iPhones. And lastly, I just want to mention that some people say that Apple is switching to a services company, and maybe that should justify like a higher free cash flow margin because services software usually have higher margins than 43%. Like